So what is AMD? Now, AMD stands for accumulation, manipulation, and then distribution. It is the three-phase cycle smart money uses to move price. So starting off with accumulation, price is just literally chopping sideways. Smart money is building orders on both sides of the market. To the average trader, this just looks like boring, directionless chop. Then we have manipulation, which is simply where price aggressively moves out of that consolidation and accumulation range by sweeping some form of sell side or buy side liquidity. What this does is it triggers stop losses and it catches retail traders on the wrong side of the move. And this is the fake out that catches most breakout traders off guard. And then finally, the third phase is distribution, and this is where the real move happens. So price just reverses hard and runs in the true direction. This is where smart money offloads their accumulated positions onto the traders who got trapped in the manipulation phase. And these three phases right here is exactly what we want to see right at the 9:30 open. So pre-market, before the 9:30 even opens, we need to see an accumulation of orders on both sides of the marketplace, where market just simply consolidates. 9:30 opens, we manipulate higher or lower depending on which way we are going to distribute, and then we will simply distribute the opposing direction of the manipulation. Now, our job as a trader, let's say we are bullish on the day, we need to get in along at the low of the manipulation leg. So as soon as price manipulates the sell side liquidity, we are looking for a buy model at the low and at the start of the distribution phase. And that's also why I have the midnight, the 8:30 and the 9:30 open levels mapped out on the chart, because if we are bullish on the day and we are expecting this pattern to run out going into the day, then we want to see that manipulation leg form below the midnight, 8:30 and 9:30 open. So to smart money, buying below the midnight, the 8:30 and 9:30 open is considered a massive discount, only if the bias and the draw on liquidity is bullish on the day. So looking on the Nasdaq right here, you can see on the 50-minute time frame, we've got a clear sell model where we read out buy side liquidity. We've got a clear unicorn model as we have your ICT bearish breaker block and the ICT bearish fair value gap. Also, if we go up to the 4-hour chart, we've got a clear draw on liquidity where price takes out external range buy stops. We're looking for an internal run back to the internal 4-hour bullish fair value gap. So the draw on liquidity is below price. 15-minute, we've got a clear A plus unicorn model. So if we drop down to the 1-minute time frame, before the 9:30 opens, look what price is doing. We're just in a tight consolidation range. Smart money's building orders on both sides of the marketplace. Then what we want to see is your manipulation leg into the higher time frame breaker block and higher time frame bearish fair value gap of the 15-minute bearish unicorn model. So we'll play price out. What does price do? Manipulates all of the internal buy stops, mitigating the higher time frame bearish paid areas. And then whatever model that you are trading, whether it's the inversion fair value gap 2022 model or unicorn model, this is exactly where you want to anticipate that model occurring. So play price out, we'll get a market structure shift bearish. Obviously I trade the ICT 2022 model. We'll get the market structure shift bearish and we have the ICT bearish fair value gap. So take a short right inside the bearish fair value gap, stops above the order block, and then we're looking to take part of the distribution phase. We also have the drawn liquidity below price, which is that 4-hour bullish fair value gap. So what I'm going to do is I'm going to take a short inside of that bearish fair value gap. TP1 is going to be at the external sell side liquidity, and then we'll hold a runner for the draw on liquidity for the day. So again guys, just stripping it down to its chrome. So we've got the accumulation. Price manipulates higher above all of the internal range buy stops, all of the consolidation buy stops over at the left. And since we are bearish on the day, we are anticipating the distribution phase to be lower going into the day. So we are looking to take a short right after that manipulation leg occurs. So I'm going to set a sell limit inside of the bearish fair value gap as we have a valid ICT 2022 model. Stop loss at the high of the bearish order block. And then final TP will be at the drawn liquidity for the day. And I will take a partial at the external sell side liquidity. So we'll play price out, tagged into the entry there, TP1 smashed, and then final TP hit. So you can clearly see how the market is respecting that 9:30 open price as a premium. So one of the core concepts that ICT teaches is going short in a premium and going long in a discount. So when we get the accumulation, manipulation above the 9:30 open, this is where smart money is looking to go short. And then you take the short right after the manipulation leg occurs, right before the distribution phase, and then ride the distribution phase out to the drawn liquidity. And then that's exactly how you can catch banger trades just like this. I mean, this trade alone, 4.33 risk to reward ratio if you held final TP down to the drawn liquidity for the day. But this just literally happens every day. So we get accumulation, price manipulates higher or lower depending on where the draw is for the day, and then we distribute in the opposing direction of the manipulation. And then as soon as we get the manipulation leg above the buy stops, that is where you're actively looking to take a short, whether that's the inversion fair value gap, a 2022 model, a unicorn model, optimal trade entry, whatever. But what I'm trying to say is this: so if you couple your ICT 2022 model, inversion fair value gap model, etc., with the AMD power of 3, then you will catch absolute monster moves. So your win rate will be significantly higher, as well as your average risk to reward on winning trades. And also, you're not just looking at power of 3 from the 9:30 open on the 1-minute chart. This is also used on the 15-minute chart to get your directional buys for the day. So if we map out the midnight open price, notice how pre-market we are accumulating, building orders on both sides of the marketplace. We've got this buy side liquidity. What does price do? It manipulates above that buy side liquidity. Then what does price do? It gives an entry model on the 15-minute time frame, that being the 15-minute bearish unicorn model, and we distribute lower into the drawn liquidity below price, which again is the 4-hour bullish fair value gap. Also, this was the exact bias and the exact trade that I had taken on this day. I will drop a screen recording on the screen right now. Obviously, as you can see, we anticipated the power of 3, we got in the short, and we rid the distribution phase down into the 4-hour bullish fair value gap. If you want to see this exact pattern playing out live, I do go live every single day, Monday to Friday, inside of the VIP Discord. So we'll go live around 9:30 AM, ready for the opening bell, and we trade up until 11 AM AST. And you simply just sit there and watch me trade live in real time. So I'll place the entry, the stop loss, the target, and you'll watch me manage the trade throughout the position as well. If you're not ready to jump into VIP yet, I also do have a free trading Discord as well. So I'll post free daily bias, free trade breakdowns, and a lot more. We also have a good free community there as well. But either way, both links are down in the description of the video. So this time we'll go over a bullish AMD example. So starting off on the forward chart, we've got a S&T at the lows where NQ held above the swing low while ES swept below it. Then we've got the ICT bullish market structure shift with a displacement closing above this swing high, this intermediate term high, followed by a bullish fair value gap within the displacement leg. So we'll drop down to the 15-minute bellwether chart and we'll anticipate a bullish AMD cycle forming. Also as well, for the drawn liquidity for the day, we had these clean relative equal highs above price as well for buy side. So we open up at midnight open. This is the 15-minute chart, and we just accumulate trading sideways, building orders on both sides of the marketplace. We've got a very clear London low right here at 3:15 AM. Market opens at 9:30. We slam down lower, taking out the sell side liquidity. We'll go down to the 1-minute time frame, and this is where you want to anticipate your lower time frame buy model so that way you can align with the higher time frame AMD cycle. So price takes out London low. We're looking for a bullish market structure shift. We'll get that right there. However, is there a bullish fair value gap? No, there is not. So again, looking at the new swing high formed, we want to anticipate that as your bullish market structure shift. So we'll play price out. Boom, price gives a valid market structure shift. We've got the fair value gap, so we'll go along inside of the bullish fair value gap, stop loss below the bullish order block, and you just target internal range buy side liquidity to take part inside of the distribution phase. So again, accumulating pre-market. And also notice on the fractal 1-minute chart, pre-market we accumulate. What does price do at the opening bell? Manipulate lower below London low. And then soon as we manipulate below London low, we'll get a ICT 2022 buy model. And this is where we expect the distribution phase to occur. So I'm going to place a buy limit inside of the bullish fair value gap, stop loss below the down close candle, which is your ICT bearish order block, sorry, bullish order block. And then final objective will be at the internal range buy stops. And then again, see how price plays out. Boom, TP smashed literally within minutes. Also again, notice how price manipulates and trades below midnight and 9:30 open before offering the ICT buy model. So accumulate, manipulate below the open levels, and then we get the buy model below the open levels, which is considered a discount for smart money. But yeah, that's the AMD cycle: accumulation, manipulation, and distribution. Once you start spotting it, you will see it everywhere. If this video helped, drop a like. It actually helps the channel grow. And if you want to watch me trade this live every single day, link is in the description of the video. And the free Discord is still there too. Link is in the description if you want free daily buyers and free trade breakdowns. I'll see you lot all in the next video.